Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Hormuz tensions resurfaced as a Qatar-owned LNG tanker is struck near the Strait of Hormuz. The fresh attack puts U.S.-Iran peace talks to the test. NATO summit takes the spotlight as Trump heads to Turkey. The conflict in the Middle East and defense spending are set to dominate the agenda. And Asian stocks drop as tech shares come under renewed pressure after Samsung's blowout earnings failed to impress investors. It's just gone 8 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. A packed show today full of geopolitics and market moves. But before we start, let's take a quick look at where markets are this morning, starting with U.S. futures that are turning a little bit lower this morning, 0.2% lower. Perhaps a rebound in the S&P that we saw yesterday, a gain of 0.7% may be brief. We're seeing a drop in tech-heavy names in Asia, but also we're seeing NASDAQ futures in the United States dropping as well. I saw a story this morning put out by our markets teams that had an interesting quote by BlackRock Investment Institute's team saying that, are we in a bubble, or rather trying to answer the question of, are we in an AI bubble? And the answer is, we think the answer depends on whether AI can turn today's scarcity into tomorrow's abundance. So the AI theme is still very much alive and well in markets this morning, and the rout we're continuing to see. So the reprieve we saw yesterday in the United States doesn't look like it will be reflected later today. Asian equities are telling that picture. MSCI Asia Pacific turning 1.6% lower. The Kospi in South Korea was more than 6% lower this morning, led by losses in Samsung after a 19-fold gain in their profit. But investors don't seem to be excited about that. We'll talk a little bit more about that in the show later on. And also SK Hynix is dropping ahead of its ADR listing on Friday in the United States. But the story this morning stemming in the Middle East is in Brent crude, 0.6% higher, $72.5 on the barrel. We're seeing fresh attacks in the Strait of Hormuz. A Qatar-linked LNG tanker was hit. This was reported by multiple outlets. We're keeping an eye out on that and whether the U.S. will decide to respond. And then finally, we're also keeping an eye out on the 10-year yields. They did move a little bit yesterday following less hawkish wagers for the Federal Reserve, but not much of a movement this morning. But turning to the regional story, oil prices are edging higher after a tanker transiting the Strait of Hormuz was reported being hit by an unknown projectile. The attacks come as President Donald Trump is set to head to the NATO Leaders Summit in Turkey, where the U.S. conflict with Iran is expected to be a major topic of discussion. But to discuss more on the events this morning, I'm now joined by Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. So we're seeing more of these attacks in the Strait of Hormuz. We're seeing 2 fresh attacks this morning. Is this the new reality of shipments through the waterway?
Yeah, it certainly seems to be. And you're right, this is not by a long shot the first time it's happened. I guess what's surprising here is that it's happening during this funeral week, shall we say, in Iran. And I think the assumption in the market was that there would be some sort of actual ceasefire as opposed to the rather patchy ceasefire that we've seen. I think the big readout from this is that Iran is absolutely determined to enforce its right to control Hormuz. What was interesting about the location of this is that it appeared to be taking the southern route via the Omani coast, which Iran has clearly said is not acceptable as far as it's concerned. All ships must go through Iranian waters or hugging the Iranian coast, and any that don't are subject to attack. So that reinforces that. Again, I think it makes it very difficult for negotiators going forward in terms of trying to get some sort of agreement about what actually happens to Hormuz in the future.
And just sticking with the oil theme, Saudi Arabia, we also understand, is selling its oil at a discount to Asia. Why? What are the reasons behind that?
Yeah, so a very unusual situation. I think the interpretation of the market seems to be that this is not a new price war. So we have seen Saudi Arabia engage in a price war a couple of times in the last 15 years. They don't think this is that. What they say is it's more reflective of this very messy situation coming out of the war and again into this rather patchy ceasefire, in that there appears, at least in the very short term, to be a glut of oil and a lack of demand or anticipated demand in Asia. So in other words, what this appears to be is Saudi Arabia trying to tempt Asian buyers back into the market for prompt supply.
And sir, just finally, you mentioned the funeral that is still ongoing in Iran of the late Supreme Leader and members of the family. What is the latest on the ongoings of the funeral? Are there more details, more delegations visiting?
So I think when we get to the actual burial, which I believe is on the 9th, I think that will be a key moment to watch. Specifically, will the Supreme Leader, the new Supreme Leader, show up to that? That will be the first time he's been seen. Again, if he doesn't, probably don't want to read too much into that. If he does, probably don't want to read too much into it. But it'd be interesting, just because it'll be the first time he'll be visible.
Yeah.
But again, we have no idea if he will.
We have no idea if he will, but that's definitely something we're keeping an eye out on. Thank you for your time, as always, Stuart. Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. Now, a down day across markets as investors rotate out of tech while assessing the next phase of the AI trade. The epicenter of the sell-off is South Korea's Samsung, whose shares dropped after reporting a strong earnings beat. Morgan Stanley's Mike Wilson sees U.S. stocks struggling to hit new highs as traders shift away from chips towards laggards, including the AI hyperscalers. He says it also will not help that the new Fed chair, Kevin Warsh, is changing things up.
With the new chair probably not giving as much guidance, he's going to allow the market to kind of figure it out on its own and have these different views. We're in that adjustment period now. And I think that's one of the reasons why the market's been a little choppy or even correcting in the last month or so, is we're getting used to this new regime, which is going to be higher volatility and potentially the bond market. But over time, I think what's going to end up happening is the market's going to settle down.
Joining us now to discuss those market moves is Deepak Mehra, Chief Economist at the Commercial Bank of Dubai. Deepak, good to have you on set with us. You heard what Mike Wilson was just saying about the Fed, but also wider market moves. Sticking with the Fed and what he was alluding to, do you think Kevin Warsh turns more dovish, especially with the levels that we're seeing the two-year inflation break-evens at?
Yes, I think Kevin Warsh is inherently a dove. The market has misread his statement of sticking to 2% inflation target as very hawkish. But at the same time, the market has not given importance to the 5 task forces that he has set up. And 2 of them are on data and inflation framework. So and then, of course, there are others on jobs, productivity, and effect of AI. It's very likely that these task forces may say, yes, 2% inflation indeed remains our target, but how we measure inflation may not be CPI and PCE. It may be some other measure, trimmed mean PCE or anything else. And so therefore, it seems that Kevin Warsh is playing the long game. He's building his credibility within the Fed, of course, with the markets, but more importantly, with the other Fed members, taking his time, getting these task forces to come with recommendations, and then changing the framework completely, which could then allow him to cut rates more significantly.
Okay, and just sticking with the same themes, but also the market moves that we've been seeing over the past couple of weeks when it comes to the tech route, as we've been calling it. Now, I understand you're not of the school of thought that believes we're in an AI bubble. I did allude at the beginning of the show to what BlackRock had said about whether we are in a bubble or not. What do you think the markets are doing right now? Are we intellectualizing before the earnings season? Are we taking profit? What do you think is happening or leading to those losses?
Well, look, the market is climbing a wall of worry, and everything comes back to, worry the investors more. But my view is that AI is in the very early stages of rollout. Okay. AI is not in a bubble. Some of the stocks may definitely be in a bubble. So let's distinguish between the two, because right now it's the first layer, which is the infrastructure layer, which has all the importance and focus. So we can see valuations getting stretched. There's a valuation risk there. But then you have the other layer, which is the models, OpenAI and Anthropic and so on, which are not even public right now. There we have an issue that commoditization of those tokens, and the token prices are already falling. And then you have the application layer on top of that, where we have seen Microsofts and Salesforces and Palantirs suffer because people think they'll get disrupted.
Yeah.
And maybe there is value over there which has come back.
So is that how you position then for the remainder of 2026 back into hyperscalers?
Exactly. And the users. which is the final layer, which will be the biggest beneficiaries. So if you remember when internet was rolled out, it was not the Ciscos and the Intels that finally benefited the infrastructure. It was the users like Netflix and Amazon and Google, which gave the best returns to the investors. So I think we are in the early stages, and this layer by layer, the stack, value stack rolls out, will give a lot of returns to the markets, except the leadership will keep evolving.
Okay, but you're saying, Deepak, you're saying that there are specific names that are in a bubble and not the wider trade. So when it comes to semiconductors, which have outperformed this past quarter, but we're seeing signs of frothiness there. Do you think that we've reached the peak?
I think that's where the bubble is, and the proof of that is that look at the leveraged ETF AUMs, where the trades in leveraged ETFs in SK Hynix and Samsung far exceed the trades on the cash values. So there is definitely a valuation issue over there.
Okay.
Will it burst? I'm not very sure because the demand stays intact. Can it go on longer? Yes, it can.
Okay. And then just keeping an eye out on the restart of the earnings season we saw from Samsung today, despite really good results. Investors don't seem very excited about that. I was taking a look at the stock earlier. It was dropping 6%. It might have dropped more since then. But looking ahead at the earnings season, whether it's in the United States or in Asia, what are you looking for? Is it capex? Is it back to fundamentals?
Look, I think one, to begin with, the market has set the bar too high. So Q1, we got some 27, 28% earnings growth when we were expecting 11 or 12. Now Q2, the expectation is 23% earnings growth for S&P 500.
Yeah.
So the bar is set very high, which means the companies have to really prove that it's not just demand which is there, where it is sustainable demand going forward. And I think that's where the worries will come, and every result will be scrutinized very closely.
Okay, so keeping an eye out on sustainable demand then. Deepak, thank you as always for your time. Deepak Mehra, Chief Economist at the Commercial Bank of Dubai. Now, still ahead, the UAE's ADNOC Distribution is making a push into South Africa's retail fuel market. We'll discuss the billion-dollar deal with CEO Bader Saeed Al Lamki next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. A unit of Abu Dhabi's biggest oil company has agreed to buy Shell's fuel stations in South Africa for around $1 billion. The deal will give the retail arm of ADNOC control of Shell's 580 retail fuel outlets, or about 10% of the market in Africa's biggest economy. Joining us now to discuss the deal is Bader Saeed Al Lamki, CEO of ADNOC Distribution. Very good to have you on the show this morning, and congratulations on the deal. Now, just speaking about the deal, can you give us a little bit of a rationale behind it? Why was it made, and what are you looking forward to when it comes to the finalization of the acquisition?
Thank you, Abby, for having me on the show. Of course, this is a historic day for ADNOC Distribution. Before I dwell into the deal itself, maybe big picture. Quickly, ADNOC Distribution is a company that has clear strategy and vision, and more importantly, a clear track record when it comes to discipline, execution on all its growth ambition. The last 5 years out of the 53 years since the inception of the company has been exceptional, and seeing steady growth of the company when it comes to its financial and operational performance. Now, this deal, this historic deal, is the fourth market that we enter. This accelerates our ambition to become a global mobility and convenience retailer. It's in one of Africa's biggest countries, growing economy, the largest in the continent of Africa. If you recall, in 2023, we've entered Africa from Egypt, from the north, and now getting into Africa as well from the south. This gives us a good platform, a good cover of the growth ambition that we have. This is a very disciplined growth ambition. We are looking at, upon completion of this transaction, subject to regulatory customary approvals, we will close this deal at an evaluation of $1 billion US. We're looking at an EV/EBITDA multiple of 6. This allows us to accelerate our ambition to become a global player. Now, financially speaking, this transactions is accretive. This is very important for us. This is accretive from year one post-closing. We are looking at EPS of 6%. This is going to provide us with 13% EBITDA accretion. We are looking at an IRR above our typical investment hurdle. So all in all, we are very confident. We've been looking at this deal for nearly 2 years, and we've studied it from all angles, and we are satisfied today that this is the right transaction that will allow us to accelerate also our dividend payout to our shareholders in the future.
Okay. But how are you planning on funding this deal? Would it be bonds? And out of the $1 billion, how much of that would be equity?
Of course, we have a strong balance sheet. This is a project finance ring-fence at SDAC level with deleveraging plan in place. This will not exceed 1.2 net debt to EBITDA. So this is a very comfortable place for us to invest in. And I think we have the right financing instruments in place and no issue in funding this transaction whatsoever. And in fact, our balance sheet will remain healthy, and we look forward to continue on our disciplined growth strategy as long as we find the right investment opportunity that will create value to our shareholders.
Okay, and I was taking a look at your press release this morning. You mentioned a 28% stake is expected to be sold to a local empowerment partner. Who do you expect to sell it to? Are you in discussions with anyone there?
Of course, this is part of our commitment to support the South African economy. It's in line with the regulation in that country. We've been talking to a number of BE partners. We are very close to close with one of the partners who will add value and will have a complementary value add in the partnership moving forward. Of course, we will make the announcement at the right time, but this is part of our commitment to this economy and job creation, security. The management team that will take also over, we will retain the capacity and the capability there, and we'll supplement them with also capabilities from ADNOC Distribution so that we have the right formula that will continue to serve our customers, who are very central to everything that we do. In any transaction that we do, we put customers first, and we'll continue to do so in South Africa and make sure that they continue to receive the service that they've been used to over the last 120 years.
And Bader, just when it comes to the benefits this will provide to the wider ADNOC group, what benefits would this provide to the wider ADNOC group? Would it be in storage, trading? What else can you see it helping with?
Of course, but let's start with ADNOC Distribution. First of all, of course, we are going to add 580 fuel stations to our portfolio. This is a 55% acceleration in our number of stations that we've targeted. We're going to jump immediately to 1,600 stations in one go upon completion of this transaction. We're going to add 360 convenience stores to our portfolio as well. And again, 70% growth to our convenience store business. We are going to add 3.5 billion liters into our fuel volumes. And again, this is also a substantial increase, 20%. Now, over and above that, this is an opportunity also to create value across the value chain of ADNOC Group. We do have the opportunity also to supply fuel from our sister companies in partnership with the likes of ADNOC Global Trading. So there is a complete value proposition that aligns with the quality of partner that ADNOC Group and ADNOC Distribution represents in any investment that we've done. Historically, we've entered the Kingdom of Saudi Arabia. We've done so also subsequent to that in Egypt and now in South Africa. That track record, confidence in delivery and execution, we will continue and bring it all to bear to support the investment that you've made through this agreement with Shell today.
Okay, and just finally, what is next on the queue for ADNOC Distribution, and what geographies are you interested in?
Absolutely. We are growing ahead of the business plan and the current 5 years strategy that we've announced. The first quarter of this year, we've seen substantial growth in our net income. We've posted results at 21%. That momentum needs to continue. We're growing organically. We're growing inorganically, and we'll continue to look at opportunity to invest. We have the right balance sheet. We are very disciplined. We do have our investment thesis, making sure that we have the right regulation, we have the right ability to add value. So we continue to find the right opportunity. What is important for us, that any opportunity has to be value accretive. It has to be EPS, DPS accretive from day one, from year one. This is something that we are very committed to. This deal, upon completion, will allow us to accelerate our earnings. And with acceleration for earnings, we can see an opportunity to enhance our dividend payout faster, in line with the dividend policy that we have, $700 million as a floor, or 75%, whichever is higher from our net income. That opportunity with this transaction could be accelerated to reward our shareholders faster. So growth ambition is there, the discipline is there, the execution track record is there. I think we will continue with the same trajectory, but we are very consumed to find the right quality investment, which we believe this one is the right one for us.
All right, Bader, we're going to have to leave it there. Thank you for your time this morning. Bader Saeed Al Lamki, CEO of ADNOC Distribution, joining us from Abu Dhabi. Now, coming up, concerns around this year's El Nino event is causing a spike in everything from coffee to cocoa. That is coming up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. SK Hynix has begun the marketing process for its U.S. listing, seeking to sell nearly 18 million American depository receipts. The memory chip maker is looking to capitalize on strong investor demand after its Korean-listed shares surged about 260% this year, pushing its market cap above the $1 trillion mark. The ADRs are expected to begin trading on the Nasdaq on Friday. Microsoft shares slipped after it told staff at its Xbox unit of plans to cut around 3,200 jobs, or some 20% of its workforce. It also plans to divest 4 of its video game development studios. Xbox CEO Asha Sharma wrote that the business today is, quote, not healthy and needs a reset, with operating margins up to 10 times lower than competitors. And a mediator has been called in to resolve the dispute between Elon Musk and Sam Altman and their dueling AI startups. The appointment comes after a jury rejected claims by Musk that Altman and other OpenAI leaders betrayed the startup's founding principles by restructuring as a for-profit entity. A former federal judge will now try to work out a settlement on the remaining antitrust and harassment claims, which weren't resolved by the jury trial. Coming up, shares in the world's biggest memory makers slump despite profits soaring. We'll tell you why investors are disappointed with Samsung's earnings next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Hormuz tensions resurface as Qatar-owned LNG tanker is struck near the Strait of Hormuz. The fresh attack puts U.S.-Iran peace talks to the test. NATO summit takes the spotlight as Trump heads to Turkey. The conflict in the Middle East and defense spending are set to dominate the agenda. And Asian stocks drop as tech shares come under renewed pressure after Samsung's blowout earnings failed to impress investors. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. We were just speaking about Samsung earnings, and in the break, I was taking a look at where the stock is. This morning, 9% lower. SK Hynix, also 9% lower. The U.S. session is pointing towards losses in the S&P later today. Reprieve that we saw in the S&P 500, 0.7% higher, seems to be short-lived, given where things are this morning. Now, this sick rout has been plaguing markets over the past couple of weeks, and it looks like it is continuing ahead of the earnings season that started earlier, with Samsung Samsung reporting an increase of 19-fold in its earnings. That did not seem to excite investors. We've got Avril to talk to us in a second about what exactly is happening there. But in Asia, we're not just seeing weaknesses in the South Korea Kospi, we're seeing weaknesses in Japan's Nikkei 225, we're seeing weaknesses in Hang Seng, and so really weakness across the board. But the story for us in the Middle East this morning is in Brent crude, which is gaining 0.7%. Fresh attacks in the Strait of Hormuz. Axios reporting earlier today that a Qatar-linked LNG ship was attacked in the Strait of Hormuz. We don't have a lot of clarity on that, but this is far from being the first time this happens since the MOU was reached earlier or last month. And so we continue to keep an eye out on the movement of ships in the Strait of Hormuz, but also on those attacks. The RRGC in Iran over the weekend telling ships that our missiles and drones are ready to fire at you, and Iran has really been telling ships to stick to routes that they've laid out for them. And then finally, we're also keeping an eye out on the yields on the 10-year notes in the United States, not doing much this morning, less than a 1 basis point gain. They were moving yesterday, the treasuries across the board, following less hawkish wagers for the Federal Reserve, but not much movement this morning. But the big story in markets this morning is in Asia, and we've got Avril Hong in our Singapore studio to tell us just exactly what is happening there. Avril?
The pain is really bad today, Abir. I mean, it was all about Samsung, right? So we got those results, but it also seems like it's being cursed in a similar fashion like NVIDIA, where you beat the street and yet investors are not impressed. When you look at how it was a 19-fold surge in profit, as you just highlighted, ultimately, I think investors are selling the fact, and there's also some market dynamics going on. You think about how SK Hynix's US ADRs come online Friday. That could also exacerbate some of these fears that the AI valuations are overstretched. And of course, when it comes to South Korea in particular, as some of our colleagues have been highlighting, the buy the dip impulse among Korean retail investors, that seems to have evaporated this month as well. So you saw it down in the early goings, and then losses just extended. You are looking at even the likes of the Thai X that at one point clocked gains early on in the session. The pain seems to be spreading. We're watching out for some of these key levels on the stocks, these memory names, along with the benchmarks in Korea, whether these sidecars or circuit breakers will be deployed. Just quick mention as well, when it comes to the 30-year auction in Japan, there was some worries that it could be a pretty tricky one, but ultimately, with this coupon coming in at 4%, that was enough to entice investors. We saw the highest demand since the year 2019. Abir?
All right, Avril Hong in our Singapore studio talking to us about the pain in Asia. And speaking of that, Samsung Electronics' quarterly profit has surged 19-fold, but it failed to impress investors. The negative reaction, despite better than expected numbers, dragged peers lower after big AI-fueled gains in recent months. For more on this story, we're now joined by our reporter Sang-mi Cha in Seoul. Sang-mi, good to have you on. Why are investors disappointed by the Samsung results this morning?
Avril has explained it just correctly. So investors are selling on the news, and a lot of these profits, the earnings, the solid earnings that we have seen this morning was reflected already and priced in these investors' portfolio. We're looking at about $58 billion of operating income for the quarter that ended in June. And that is very important figure to take a look, though, because it dwarfs what the company has made in terms of profits the entire 2025. So it is a blowout quarter that it's had. The revenue has also doubled, but it's just investors are just saying that it is just not enough, that these extraordinary figures are not enough to impress them, and it's just becoming more and more difficult to convince these investors to look at these figures and be really really impressed. But again, a lot of the investors say do not sell on the news just yet, and do not trim all the exposure, because Thursday next week we've got TSMC, and then the Bank of Korea is also going to have the rate cut decisions, rate decisions. So all of this will tie back to the AI trade and coming back to that memory trade that we've been watching.
And just keeping an eye on the second biggest constituent in the Kospi, SK Hynix, I'm seeing it's now down about 10%, and it has kicked off its marketing for its U.S. listing. What more do we know about that and the reasons behind the weakness this morning as well?
That's right. SK Hynix U.S. listing is it will start trading on July 10th. That will be this Friday, and investors have been looking forward to this, really, and the key momentum here is really narrowing that discount, the gap between the valuation gap between SK Hynix and its U.S. peer Micron. And some of the investors have predicted that about 30% upside in the sole listed stock for SK Hynix once the ADR is traded. That's because a lot of the inflows will also occur because the U.S. investors had to rely on over-the-counter ADRs, but now the liquidity problems will be gone, and that's something that the investors are watching, especially just as you said, SK Hynix has more than tripled this year alone, and today's share moves is just reflecting the AI momentum that's waning a little bit after the SK preliminary earnings. Samsung preliminary earnings, yes.
All right. All right, Bloomberg Sangmi Cha, keeping an eye out on those moves. Now, former Japanese currency official Tatsui Yamasaki says the yen is currently undervalued and should realistically strengthen to around 130 per dollar.
I don't know, but I think the current yen exchange rate is substantially undervalued. And I think the deviation from the range, which reflecting economic fundamentals, I think more than higher than maybe more than 10% or 20%.
Oh, wow. Just keeping an eye out on the yen, which is currently at 161.8 per dollar. But moving to a different region, Arabica coffee futures have soared, clocking the steepest intraday rise in 26 years as volatility soared on weather concerns. Prices in New York rose as much as 19% to $3.57 a pound on Monday before trimming those gains slightly at the session's close. This year's El Nino event has contributed to a recent spike in futures for coffee and other pantry staples like sugar and rice. Our chief Africa correspondent, Jennifer Zapasaja, joins us now from Johannesburg to discuss this story. Jen, good to have you on. Can you just talk us through how much of an impact or worry there is around this weather event and what impact it's having?
Yeah, of course, Abir. There's quite a bit of concern with this El Nino that has been declared. The first time it's declared from the past few years. And specifically when we talk to a number of analysts, it's because of how strong we could see some of the weather events contributing to agricultural production. You were just talking about some of it in your intro there. And we're already seeing it transpire specifically in West Africa. We are seeing heavier rainfall, stronger rainfall in places like the Ivory Coast and Ghana, which are of course the top producers of cocoa, experiencing extremely heavy showers. The concern there is that then we do increase the risk of something called black pod disease, which can then lead to flowers dropping, blocking farmers from then accessing their plantations, and potentially then that reduces the yields for the season. And it's not just that. You were talking about Arabica coffee. We're also seeing some of those concerns playing out in Brazil. And so that is contributing to some of the price volatility that we had been talking about just a few years ago as it pertained to cocoa, some of the volatility. Now the concern is just the just the uncertainty around El Nino and how severe it can get for some of these big agricultural producers, what that looks like for the upcoming farming season, and then trickle down to what then that might look like for consumers.
And Jen, is it just a weather thing at play here? Are there more or other factors that we're looking at?
Well, if you're there looking at Arabica coffee, if we just start with Arabica coffee, there is some concern around the technical and the market factors. So with coffee, if we just point out the international exchange, we actually saw them increasing margin requirements. And so that makes it more difficult for traders to actually trade at certain positions and maintain some of the prices that they're trading at. So that's contributing to some of the volatility for coffee. When it comes to cocoa, though, we've been talking about this for quite some time, especially in West Africa. Labor issues are becoming a real concern for a number of these producers. In particular, in Ghana, we had spoken quite a bit about farm gate prices. Cameroon is experiencing some of the issues around this, and insufficient farm gate prices then leading to less highly skilled farmers than out on the farms, and therefore potentially that then affecting some of the yield. So it is weather. That's the main factor that is concerning a number of analysts when they're taking a look at prices. But then we have to look at where the technical factors are in play when we look at the markets. And just finally, in Brazil, there is some anticipation and expectation that there are going to be some higher prices. So Bloomberg is reporting that potentially we're seeing some traders even holding their positions, waiting to see where prices go from here.
All right, Jen, thank you. As always, Jennifer Zapisaja, our chief Africa correspondent in Johannesburg. Now, coming up, NATO warns its supplies of missile interceptors are running low as Ukraine comes under fire from Russia. We're at the NATO summit next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. NATO Secretary General has cautioned that allies do not have an endless supply of missile interceptors hours after Ukraine implored the military alliance to send more to repel Russia's deadly airstrikes. Mark Rutte warned that Moscow is not acting alone.
We cannot be naive about China. We see it also in the war with Ukraine, where China, North Korea and Iran are key enablers of Russia's unprovoked war of aggression against Ukraine.
For more, we're now going to Ankara, where our chief Europe correspondent, Oliver Crook, is covering the NATO summit for us. Ollie, good to have you on. President Trump arrives at the summit later today, a year after the allies pledged to increasing spending on defense. Have they met their commitments?
They're certainly on the path to do so, Abir, and I think that for the Trump administration, this summit that was a year ago, it was held in the Netherlands, the one in which he basically compelled all of the members of NATO under that sort of great ambiguous threat that potentially the United States would not be there to support NATO and support the Article 5 commitment, basically getting them all to commit to spend 5% of their GDP annually on military and defense. This was really one of the most unmitigated successes of Trump foreign policy, and this summit is really seen as a sort of follow-on to that. For the leaders here, for the Europeans in particular, it's an opportunity to advertise the ways in which they have begun that spending process, to lay out some very concrete details about what they're doing. And as we heard from the Secretary General of NATO, Mark Rutte, yesterday, saying that we will get announcements of tens of billions of dollars in terms of purchases, in terms of commitments, in terms of procurement contracts, and those are the kinds of things we're going to see over the next couple of days. Of course, in that 12-month Abir, it has not escaped the attention of everybody. There have been a lot of other geopolitical developments. Of course, the war in Iran sort of being namely among those. And of course, that has caused quite a bit of strain among the NATO alliance, particularly bilaterally between the President of the United States, Donald Trump, and a number of NATO members, including the Chancellor of Germany, who had said that Trump was being sort of humiliated within Iran. And as a consequence of that, the President pulled troops out of Germany. And of course, you have this sort of ongoing spat between the Prime Minister of Italy, Giorgia Meloni, and President Donald Trump, which is only sort of heating up yesterday on Truth Social, with Trump posting a sort of a disparaging meme of her. But again, these are some of the tensions that are still sort of residing here. But for the Europeans, really, this is about advertising what they've been doing and not rocking the boat with the President of the United States.
And Ollie, on Trump's agenda as well is a meeting with Ukraine's President Zelensky tomorrow. What do you expect to come out of these talks?
Yeah, so absolutely critical for Zelensky. So while the Europeans are trying to not shake the boat, I think this is, again, another opportunity for the president of Ukraine to try to lobby the president of the United States to get him back on Team Ukraine, maybe get him on Team Ukraine for the first time since he took over the Oval Office. You'll remember that a couple of weeks ago, Zelensky did manage to meet with Trump at the sidelines of the G7 meeting. There began that process to try to re-engage the president of the United States in his diplomatic efforts to end the war in Russia. As you know, you'll have the president of the United States. He had a conversation with Vladimir Putin a couple of days ago ahead of this summit and talked about the question of Ukraine. The question is, will the United States really re-engage with Ukraine? And that is sort of the diplomatic side of things where Zelensky really would like to see President Trump really buy back in. But another one is a much more practical side of things, and that is the question, as we alluded to there from Mark Rutte, about air defenses for Ukraine. Ukraine has been talking about the need for air defenses for years. Now they are really sort of at very, very, very low levels, and as a consequence of that, you're seeing a lot of these ballistic missiles coming from Russia, penetrating through the skies of Ukraine and really hitting basically all of their targets because they don't have the hardware to stop them. So that is going to be absolutely critical. We heard from Mark Rutte saying that basically you don't have enough air defense capacity within NATO. The question is, will there be any capacity from the United States that Zelensky can get from President Donald Trump?
All right, Bloomberg's Oliver Crook at the NATO summit covering all the details for us there. Thank you. Now, before we head to the break, just keeping an eye out on the Kospi in South Korea, which has fallen 8% as of now. It's nearing a trading hold, so keeping an eye out on what is happening there, and definitely on Samsung and SK Hynix and the weaknesses that we're seeing in South Korea this morning. But coming up, Abu Dhabi's Mubadala Wealth Fund is operating up one of its largest investment businesses to outside investors for the first time. That is coming up next. This is Bloomberg. Welcome back to Horizon's Middle East and Africa. Now, before the break, we were talking about the weaknesses in South Korea this morning stemming from Samsung. A hot headline just flashing across the Bloomberg terminal. Samsung shares extending their losses to 10% after the preliminary results earlier this morning, despite the earnings beat. Now, South Korea's Kospi, of which Samsung is a part, has the trading on that is halted for 20 minutes after the 8% drop there, again, stemming from the weakness in both Samsung and SK Hynix. So really continuing this tech route, possibly some profit-taking, possibly investors questioning the AI trade. But the weakness in South Korea this morning continues and weighs on Asian stock sentiment generally. But turning to the region again, Abu Dhabi's Mubadala is opening up one of its largest investment businesses to outside investors for the first time. The wealth fund is transferring a $25 billion credit portfolio to its alternative asset manager, Mubadala Capital. This comes as part of a long-term management agreement that will allow the platform to start raising third-party capital. Bloomberg's Dinesh Nair has been following the story for us. Dinesh, good to have you on.
Thank you.
Can you give us a little bit more details about the deal and what ensues?
Yeah, so Mubadala is one of Abu Dhabi's largest sovereign wealth funds, and they've been running a credit business within the sovereign wealth fund for more than 15 years. What they're doing now is essentially transferring the management of that business into its alternative asset management unit, Mubadala Capital. The significance of this move is that it allows Mubadala broadly and Mubadala Capital to go out and raise money for its credit business from external investors. When the business was with the parent Mubadala, it operated within a sovereign wealth fund platform, which meant it didn't raise third-party money, and now it has the ability to do that as part of the agreement with Mubadala Capital.
And so why is it doing that now? The timing question. Why is that happening now?
Yeah, the timing is quite interesting because we've all read a lot of negative headlines around across the private credit industry. But I think speaking to some of the senior executives at Mubadala Capital, I think they believe that the long-term fundamentals of the industry is still very intact. A lot of what we saw in the private credit market has been retail money redemptions. Whereas institutional investors, more sophisticated investors like Mubadala, who have a very long-term view of the sector, are quite bullish. And so what they're doing is essentially doubling down on private credit at a time when the world seems to be a bit more negative, sentimentally to the sector. So they're essentially doubling down and allowing their third-party unit to raise money for the business.
All right.
Yeah.
Bloomberg's Dinesh and I are keeping an eye out on all those deals. Now, moving on to football, the United States has been knocked out of the World Cup after losing 4-1 to Belgium, despite a controversial FIFA ruling prompted by Trump's intervention that allowed star striker Florian Balogun to play. A dominant Belgian side led by Charles de Ketelaere, 2 goals, easily controlled the match. And Cristiano Ronaldo says he has played in his last World Cup game after his Portugal side lost 1-0 to Spain. The 41-year-old was emotional at the full-time whistle after a dramatic stoppage time winner from Mikel Merino knocked Portugal out of the tournament. Spain go through to the quarterfinals. Ronaldo leaves the global stage as the only player to score in 5 different World Cups, but his ultimate dream of lifting the trophy is officially over. Now that's it for Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. Stick around with us for Daybreak Europe. This is Bloomberg.